So, what are merchandising operations? In earlier chapters, you learn about accounting for smart social learning, an e-learning business that specializes in providing services, online courses in accounting, economic, marketing, and management. In this chapter, you learn about accounting for merchandisers. A merchandiser is a business that sells merchandise or goods to customers. The merchandise that this type of business sells is called merchandise inventory. Merchandisers are often identified as either a wholesaler or a retailers. A wholesaler is a merchandiser that buys goods from a manufacturer and then sells them to retailers. A retailer buys merchandise either from a manufacturer or a wholesaler and then sells those goods to consumers. The operating cycle of merchandising business. The operating cycle of a merchandiser is as follows. It begins when the company purchases inventory from an individual or business called a vendor. The company then sells the inventory to a customer. Finally, the company collects cash from customers. Because the operating cycle of a merchandiser is different than that of a service company, the financial statements differ. Exhibit 5.2 show how a service entity financial statements differ from a merchandiser financial statement on the right. As you can see, merchandiser have some new balance sheet and income statement item. On the income statement, a merchandiser company reports the cost of merchandise inventory that has been sold to customer or cost of goods sold. Cost of goods sold is also cost. On the income statement, a merchandising company reports the cost of merchandise inventory that has been sold to customer or cost of goods sold. Cost of goods sold are called cost of sale. Because cost of goods sold is usually merchandiser main expense, an intermediary calculation gross profit is determined before calculating net income. Gross profit is calculated as net sale revenue minus cost of goods sold and then represents the markup on the merchandise inventory. Gross profit is the extra amount the company receives from the customers over what the company paid to the vendor. After calculating gross profit, operating expenses are then deducted to determine net income. Operating expenses that occur in the entity measure line. Operating expenses are expenses that occur in entity measure line of business. On the balance sheet, a merchandiser includes merchandise inventory in the current assets section representing the value of inventory that the business has on hand to sell to customers. Remember that the assets in the current assets are listed in the order of liquidity. Therefore, mm, merchandise inventory is usually listed below accounts receivable, but before the prepaid rent. How are purchase of merchandise inventory recorded in a perpetual inventory system? As not previously, the cycle of a merchandising entity begins with the purchase of merchandise inventory. We will continue to use our fictitious company Smart Touch Learning, which has now decided to discontinue its service business and instead plan to sell touchscreen tablet computers that are preloaded with its e-learning software programs. SmartTouch Learning will purchase this tablet from a vendor. As noted previously, the cycle of a merchandising entity begins with the purchase of merchandise inventory. We will continue to use our fictitious company SmartTouch Learning, which has now decided to discontinue its service business and instead plan to sell touchscreen tablets computers that are preloaded with its e-learning software program. SmartTouch Learning will purchase this tablet from a vendor. The vendor, Southwest Electronic Direct, shipped the tablet computers to SmartTouch Learning and sent an invoice the same day. The invoice is the seller request for payment from the buyer. An invoice is called a bill. Um, Exhibit 5.3 is the bill that SmartTouch Learning receives from Southwest Electronic Direct. After the merchandise inventory is received, SmartTouch Learning pays the vendor. Purchase of merchandise inventory. Here we use the actual invoice in Exhibit 5.3 to illustrate the purchase process. Suppose SmartTouch Learning received the goods on June 3, 2015, and then make the payment on that day. Ignore the credit term on the invoice at this point. SmartTouch Learning records this purchase as follows: merchandise inventory debit and cash credit. Merchandise inventory $35,000 and cash $35,000. The merchandise inventory account on asset is used only for goods purchased that the business owns. The merchandise inventory account an asset is used only for goods purchased that the business owns and intend to resell to customers. Office supplies, equipment, and other assets are recorded in their own accounts. Assume that on June 3rd, instead of paying cash, SmartTouch Learning received the merchandise inventory on account. The purchase of inventory on account is recorded as follows: merchandise inventory, 35,000, account payable, $35,000. Mhm. Purchase discount. Many business offer purchasers a discount for early payment. This is called purchase discount. Southwest Electronic Direct credit term of 3 bar 15 net 30 day mean that SmartTouch Learning can deduct 3% from the total bill, excluding freight charge, if any, if the company pay within 15 days of the invoice date. Otherwise, the full amount net is due in 30 days. This credit term can also be expressed as 3, 15, and 30. Term of N30 mean that no discount is offered and payment is due 30 days after the invoice date. Most credit terms express the discount time period, and the final due date occasionally. The credit terms are expressed as EOM, which means payment is due at the end of the current month. If SmartTouch Learning pays on June 15, if SmartTouch Learning pay if SmartTouch Learning pays on June 15, 2015, which is within the discount period, the cash payment entry will be as follows: account payable 35,000, cash 35,000 minus 3% of 35,000, merchandise inventory 3% of 35,000 in credit. When making payment within a discount period, I will always debit account payable for the full amount of the invoice. Otherwise, there will be a balance remaining in the payable account, even though the invoice has been paid in full. The purchase discount is credited to the merchandise inventory account because the discount for early payment decreases the actual cost paid for merchandise inventory as shown in the T account. Notice that the balance in the merchandise inventory account is exactly what was paid for merchandise inventory on June 15, 2015. Also notice that the account payable account shows that the invoice was paid in full with no remaining balance. What if Smart Touch Learning paid this invoice on June 24, 2015, after the discount period ends? Smart Touch Learning must pay the full $35,000. In that case, the payment is as follows: account payable 35,000, cash 35,000. Purchase return and allowances. Sellers allow purchasers to return merchandise that is defective, damaged, or otherwise unsuitable. This is called purchase return from purchaser's perspective. Alternatively, the seller may deduct an allowance from the amount the buyer owed. Purchase allowances are granted to purchaser as an incentive to keep goods that are not as ordered. Together, purchase return and allowance decrease the buyer cost of merchandise inventory. I'm going to stop here now.